So let's look at US oil and possibly see what's going on with OPEC. I think at the moment we are looking at OPEC world data sheet and economic release for 2025. The last meeting here in Vienna. So it's also good that you look at OPEC world data sheet to draw conclusion on trade directional bias for oil. The outlook has been outlined and the potential target also set for 2025 and the way forward and energy consumption demand and logistic and distribution challenges. So let's look at the structure and we'll be looking back in 2022, 2023. So we want to make use of the most recent swing in price where we have seen that oil made some few consolidation before breakout of that consolidated supply roof and to create a, a new high of 94.924 per barrel of oil. And I will be taking note of this price action at this level. And the price dropped again from the time after it hit that high to around 68.639 and create a W structure. That is a reversal price action. And the oil price upswing again, rose again into $87 per barrel, 87.03 per barrel of oil. And if you take note of this structure, a broken supply roof came back as a demand floor, that gives you a descending trend line. So you want to hold it, knowing well in the future that price will come for retest. Yes, it will come for retest. It might just be a matter of time, but it will come for a retest. It will come for a retest. Breakout of structure, retest one, RT1. So on that descending trend line, DTL, price returned in April 2025 to respect it. And came back another time again, still within the zone, and oil price have returned. So we are hoping that the global energy demand will continue to surge. Any disruption in the logistics, any geopolitical tension, this could be bullish catalyst to shoot more price shoot up for energy, and nobody want to see energy crisis. So that was what really happened, and we have seen that price continued, and we had a benchmark descending trend line starting from December 2023, a W structure after that upswing, that retest, and we have seen that oil came back and create another low 66.119, and that gave us another descending trend line, and oil has gone on, to keep playing and technically broke that structure and retested a break of a demand floor. SR1, SR2, SR3, SR4, break of that structure came here on retest. Retest 1, retest 2, retest 3, and you have seen the liquidity picked from the floor has gone on. And if you clone this structure, this descending trend line acts as a dynamic support and place it on the current high of oil where oil tapped into 95.55 dollar per barrel, and that has given us a current price action as price rose on geopolitical tension between Israel and Iran. This is a geopolitical candle. When Iran was threatening to bomb the Gulf of Hormuz and other oil infrastructure in Qatar and so many other things. So the global energy crisis was something that was quick to be arrested, and shortly after that, oil dropped again. Oil dropped. So I think for now, for oil price, honestly, it's my strategy for trading oil is to stay on the edge. Yes, my strategy for trading oil is to stay on the edge. I don't want to go into oil buy or sell for here. Honestly, It's indecisive to trade oil at this zone. It's completely indecisive. It's either you wait for price to return to the floor. That was a broken supply roof. Look at it. ROS1, ROS2, break of RS, return here as a retest one after break of structure. You want price to come back here. If price come back here at $64 per barrel, you may want to go buy an oil. You may want to do so. But where price is now, there is no trade for oil. You know, when you are trading oil, you need to be very, very careful. So you need to allow price to return here into a broken supply roof now as a new demand floor, which has been tested before. Then you want to pick it up from there. Yes, you want to pick it up from there. And if you pick it up from there, of course, here we present resistance to upswing, which will come down to retest another broken supply roof as a demand floor, and we target the roof again. And the break above it will ultimately expose oil into $85 per barrel. So oil is strictly based on demand and supply, which OPEC are the ones who are setting this rule for themselves and for other members. And aside that, geopolitical tension can change trade dynamics. Strategic oil reserve in the United States also affects when we look at the reserve being depleted and reserve being stockpiled. Are they buying or they are selling? Sometimes they begin to tap into their reserve and not to buy. So we look at this and look at SP data, and trading oil is very fun. Oil is very practical. It's not like other things that are intangible. Oil is very, very practical. Gold is practical. And the price of oil you see here is the price of oil in the world market. So I trade oil at a with a very strict strategy. I hold oil buy at this lower level. I posted it, in the month of May. I posted oil buy here and I hold my oil buy position. I'm not letting that position go. I will not let it go until break out of this structure. If we break out from here, I close my oil buy, knowing well that price may come down to retest a broken descending trend line. You see here, you have a descending trend line breakout here. ROS1, ROS2, ROS3, breakout of RS, price O here for a retest. So you could see oil return back to $58 per barrel again. So, but the litmus test will be here. So you watch, if oil breaks out from here, close your buy position so that you don't get that money taken away from you. So this is what I see for oil, and I wish you a happy new week. And as you start the week strong. Make out time. If you find this oil analysis very useful, come to the comment section, like and share. Let me know your view, let me know your perspective, so that we can continue to look at natural gas and possibly other things that are very relatable. Going forward, I want to make analysis on things that are relatable, things that people can understand. It's not just things people don't know, you know. So please like and share for algorithm. Thank you. Bye bye.